What's up, everyone? We're not going to waste any time here. We're going to talk about spot Bitcoin ETFs. We're going to look at Bitcoin's chart and a resistance we have to break out of. We're also going to talk about a CME gap to fill potentially for Bitcoin. And on Monday, we did see a positive flow for the spot Bitcoin ETFs to the tune of 28 million. And it wasn't actually IBIT, but it was Fidelity, FBTC, that had the highest inflows. But sadly, spot Ethereum ETFs are still on a negative streak. But looking at Bitcoin, we did see a $28 million net inflow from mostly Fidelity. Thanks to Fidelity's $28 million inflow and Bitwise's $21 million inflow, Bitcoin was able to post a positive inflow after some consecutive days of outflows. Now here's something really interesting about this. IBIT actually posted an outflow, a $9 million outflow. They have been very well known for posting either inflows very consistently. There was something like 67, 69 days that they saw nothing but inflows. And then recently they saw one outflow day, and then they have occasional no flow days. But this is one of the first net outflows. So that is something to be aware of. That is something that might raise some concern. Now remember, despite this recent streak of outflows, barring Monday obviously, these spot Bitcoin ETFs has still brought in almost $17 billion overall in net inflows since they started back in January. I do think that by the end of this year, they'll be over 20 billion in net inflows, probably closer to 22 billion. Considering that every quarter they see somewhere around 6 to 8 billion per quarter, I do think we'll end the year with at least another 5 or so billion, maybe 6 billion or more of inflows, bringing this to over 20 billion, probably around 22 billion. But what do you guys think? Do you think there will be more hype in Q4, being that Bitcoin typically sees a good rally at the end of the halving year? Or do you think we'll see less flows, being that these spot ETFs have had more time in the market, more time for people to, more time for the kind of the honeymoon phase to wear off, so to speak? I'm assuming that we'll see somewhere around $5 billion in inflows, which would be a little bit less than what we have normally seen in the previous quarters. But who knows, when we start seeing the hype draw in, if we do really have a good Q4 like we have seen in the past, this might bring a lot of hype to the spot Bitcoin ETFs and might kind of fuel the fire. Now I also want to talk about this article. I'll leave it down below for you guys, but basically it's saying why we should expect a $54,000 Bitcoin soon. And according to this article, Bitcoin CME gaps have been filled by price every time over the past quarter. And over the weekend, another gap was formed near 54,000. These gaps are formed because the CME does close on the weekends, so it can create a little bit of a disparity between Bitcoin's live price and the previous close price. So that creates a gap. But this is interesting. During the third quarter, Bitcoin formed a total of 10 CME gaps, each filled during active hours. But while some gaps are filled within days, others can take a few weeks. We had a gap on July 12, 57,800 and 60,900. This gap wasn't filled until August, until that big correction we saw. But the probability of these gaps eventually getting filled is relatively high. Now I do want to show you guys something that I'm watching for on Bitcoin. For one, you guys know that I've been talking about this inverse head and shoulders. As long as we hold up this 54,000, this can be our second shoulder. There's the head. And once we can break out of this descending resistance, this is one thing that I'm mainly focusing on, is this descending resistance. It's a lot clearer on shorter time frames. You can see how we bounce off of it multiple times, continuing to be unable to break out. I do think once we get our breakout, the market will react to it. This is our current trend, however. It is a downtrend right now. Until we break this resistance, we are going to continue our downtrend, in my opinion. Similar to this uptrend that we saw until we finally broke structure. And then it became resistance, this blue line. For a while, the trend we were following, an uptrend. Bitcoin goes into these waves. It has downtrends, uptrends, uptrends, downtrends. This is just another trend. This is a downtrend. Once we break this resistance, I do believe our uptrend will start, and this could be an uptrend that ends the year very strong. But for now, Bitcoin definitely has some work ahead of it. We still have to break our 50 MA and our 200 MA. We're still facing our recent death cross. You want to typically see this red line above the green line, and that is not the case. And this is mainly thanks to our long pullback that we have seen. This kind of long correction that we have seen recently. Let me remind you of Q4. I know people are saying lower highs, lower lows. It's a downtrend. It's over. The top is in. We have seen this before, guys. We have seen this in 2020 where we seem to have topped out. We start setting lower highs, lower lows. The highs are much lower than previous highs. We even saw a death cross as well, very similar to what we see here. This death cross, Bitcoin sold off a little more, then it starts an uptrend, breaks that death cross, turns it into a golden cross, breaks the downtrend, and breaks the previous all-time high, and doesn't stop, just keeps rallying after that. Once we break that 74,000 area, we are not looking back until crypto winter, until 2026 at some point. That's just my suspicion. I do think Bitcoin will follow its 4-year cycle still. I have no reason to believe otherwise. And I do believe once we break that 74,000, we are going to go on our epic run. This is the time you definitely want to be in it. Now, I did mention to you guys in my last video about CPI, and that's going to be coming out on the 11th, so tomorrow. We also have PPI, this coming out the day after, this coming out the 12th. And this has been pretty much in the Fed's target. However, this is not really what the Fed is watching as closely. But this has been in this like 2.5 to 2.2% range. Right now, on this side at least, we don't have any forecast. I'll try to look around and see if I could find something. But our previous read was a 2.2. And I do want to show you guys in here that they do sometimes revise. This was a 2.6 revised to 2.7. That's not necessarily good. This was a 2.2 revised to 2.4. That's not good either. This was a 2.2 revised to 2.3. So, you know, whatever the number is, they can always change it. But really, you know, once the number's out there, the market's going to react to it regardless of how they revise it down the road. I do think we're going to see somewhere around a 2.2. If we can see lower, it doesn't change anything because the Fed's already going to cut. Doesn't matter. If it comes in really, really low, I still think it doesn't matter because CPI will be more closely watched. The market will definitely react if we see something come in way lower or way higher than expected, but I do think the Fed is cutting either way. I think even if this comes in higher than expected or higher than the previous read, if it comes in like a 2.3 or 2.4 when it's expected to be something lower, I think we are still going to get rate cuts. This, along with CPI and of course PCE down the road, is going to potentially change the roadmap of cuts, such as if these all come in higher than expected, the Fed will have to be a little more cautious with cuts. But if these are coming in much lower than expectations, the Fed will be on a clear path to cuts, trying to save the labor market before it fails. It's just funny how things change so quickly from a focus on inflation to suddenly a focus on the labor market. But tomorrow and the next day will be big days for inflation reads. It will be a volatile day for the market, but I do think regardless of what these reads are for both CPI, PPI, in the upcoming Fed meeting, the Fed is going to cut. The market's expecting a 25 basis point cut. I am as well. I think a 50 basis point cut would kind of send a signal that there are real problems, and the Fed does not want to do that. The Fed wants to start small, act like everything's okay, act like all things are calm. I'm just hoping the labor market can hold up if the Fed is going to be so slow. But let me know how you guys are feeling today. It's definitely going to be a volatile week with CPI and PPI, and then I believe next week is the Fed meeting. To me, what's really going to kick off this bull run, or what's going to send this bull run on its next leg up, is global M2. Global M2 is expanding. That means the money around the world is expanding and money will go into Bitcoin. If you follow the Bitcoin halving cycle and global M2, they almost line up perfectly, funny enough. And I do believe in the end, it's all chalked up to Bitcoin's halving cycle, supply and demand in the end, and global M2, money printing around the world. These two factors are the largest factors for Bitcoin's price. And I still do believe we are in the right time to be in Bitcoin. But what do you guys think? Do you think this will be the first Q4 during a halving year where things don't go as expected, where things are actually bad? And do you think 2025 will play out like we expect, or do you think it'll be a bad year for Bitcoin? Despite the potential for a recession, whether we're getting into one, whether we're already in one, this is what Bitcoin was made for. And I honestly think Bitcoin will do very well in a recession. But what say you? Let me know in the comments down below. Thanks as always for watching, and I'll see you on the next one.